I am expecting new lows to come on Bitcoin. This comes off the back of the CME gap fill. This was the CME gap from November, which has now been filled. And I see everywhere I look, people extremely bullish, longing, thinking the bottom is in. I have a contrarian opinion of this, and this has been the most highly requested video that I've had in a long time. Of course, I've been very transparent and honest with my opinions of this rally that we've seen over the past few days over on X and Twitter. And, you know, everybody is just saying, give a video, please, we need more. And I'm not going to lie, I'm very, very, very busy right now. But nevertheless, I have about half an hour free here on a Sunday, which I'm going to give you to explain the thought process. Of course, if you are a member of Chart Champions, you already know. But for the public here on YouTube, I'm going to give you a glimpse into this insight and, share with you some very important knowledge, insights, and, bigger explanation of why I believe new lows will be coming. So first of all, let's structure this video in a way of understanding why people are so bullish right now with the gap fill. And it comes off of understanding that you can say that this is, yes, very bullish for Bitcoin. And then, you might be wondering, well, why do you have this contrarian viewpoint? And I will, of course, explain that. First of all, let's go back. Of course, we are talking about the important gap fill of November 2024. Okay, so this is the gap that we saw to the upside. This is the CME price action on your futures. You gap to the upside, consolidate, back test to fill the gap. People basically view this as very bullish, now to go to all-time highs. Well, that was November 2024 gap. Let's go back a year to December 2023 and understand why people are so bullish about this. So this is pretty similar price action, right? We saw a gap to the upside here. Price gapped upwards. We went sideways for consolidation before coming back testing, filling the gap, and from that gap fill, massive pump, which of course led to new all-time highs. So this is basically what people are expecting once again. Gap up, consolidation, back test, fill the gap, pump to new all-time highs. So remember that price action when we go into what we're looking at now. Gap to the upside, consolidation, back test to fill the gap, massive pump to the upside. And I will show you a few examples of why I obviously am looking at the CME gap and recognize the importance, not just when it's gaps to the upside, but also when you get these gaps to the downside. Very important bit of price action to be aware of. You can see here, gap to the downside, price comes up, fills the gap, right? That gap got filled, and that was the very high of the rally, all down from there. Once again, you can see here, a gap to the downside, big move down, price moves up. This gap is filled with this bit of price action from the third. And there we go, down from there. So the gaps are very important. And look at this, you actually have a gap in price action right now. So be aware of that, my friends, $86,000. But these gaps, very, very drawn to price action. I want to first focus on this one from November 24. So I've been saying very publicly and honestly that this gap, there's a few things that I need to explain to you first of all. First is, did this gap fill give a long trigger entry? And the answer is yes. I myself actually took a long from this gap fill. And I want to show you first, I'm going to share with you a few very good insights here. First of all, the fill. And I want to show you the fill from the 30-minute time frame because I know a lot of people actually view the gap as different places to be filled. If you're on the daily chart here, where would you actually pull your fill from? You're probably going to take it from the wick, right? You would be thinking, well, there's the wick, there's the other wick. Okay, we'll take it from the wicks. I want to show you why this, in my opinion, is not wrong per se, but not as precise. So if we just temporarily change the one which most people would take, and we'll put that in pink. Okay, we'll come down on the 30-minute chart, and this is where this will make sense, so bear with me. 30-minute chart, you can see that a lot of people where they would have took it from the wick is not where price action actually closed on the Friday. Remember, to get the gap, you close on the Friday night, you open on the Sunday night. And obviously during that period, prices gapped upwards here over the weekend. But the actual close on Friday night was 77,100. A lot of people are going to be looking at 77,900. And I want to just show you, this was very interesting for me. We come over to the price action then, again a few months into the future, but it's still holding up. Everyone was looking at this gap. Remember, I actually longed on the 28th of February, offered a partial gap fill. I ended in a very nice trade, profitable trade. But of course, I'm no longer in that. But nevertheless, you can see here how we hit the top of that gap with just the wick, and it got an initial reaction. My thoughts are, I did not long this, and I'm thinking to myself here, well, I want to see the actual full gap fill from my perspective. Again, you can verify this as a member very easily, where I've explained this whole theory prior to this being hit, right? Weeks prior to this, of why I'm looking at 77,100. But if you're not a member, I guess you can just go past through old videos and see the level that I had marked out. But yeah, members can verify this very easily. But nevertheless, I believe you'll trust with what I'm saying here. Anyway, we had the initial reaction, and then we had the proper gap fill from the Friday price action, and that was just wonderful, right? The reaction, mini range type of failed auction. So you actually had the entry trigger as you got back into this on the daily open itself, from the lower the move. So there's a few things that I want to explain here of why we put in the low where we have, what we're looking at next. And I hope not to confuse you here, honestly, but it's fairly complex, I would say. But I'm going to try and make it as simple as possible. So we have now filled this gap. One thing that I actually really liked is the confluence on this was something that I want to bring to your attention here. Think of the high here. High was put in, all-time highs, 21st of January. What happened on around the 21st of January? It was actually trumpcoin. Trumpcoin happened, my friends. And its all-time high, okay, put in on the 25th of January. Okay, so the 25th of January. Sorry. Zoom in here, and I get that correct. The 19th of January. And it kind of fell down, 19th, strongly down, 20th. And there it was, massive drop to the downside. So again, this is not the way that I trade Bitcoin by just looking at Trumpcoin. But there's something that I want to bring to your attention here. And that was the timings of Bitcoin putting its all-time high on the 21st. And Trumpcoin starting to get big drops to the downside from the 20th, really. So we're in that same period of big drawdown happening. So reminding you one final time here, Bitcoin putting in its major drawdown from the all-time high here, to be precise. Look at that, actually, the 20th of January. And Trumpcoin here getting its major move to the downside, again, from the original all-time high to the retest on the 20th of January. So why is this important now? Well, a few factors here that I want to bring to your attention. I do have a short, of course, on Trumpcoin from $69, but that's not important at this point. But the fact that we came down to $10, like this really big, important psychological level. You all know the emphasis that I place on these psychological levels. And Trumpcoin actually taking out perfectly the liquidity at $10 is very, very, very significant, and gave a pretty easy long trade in its own itself, right? Swing failure pattern type move of $10, then you got the retest, and then you pump over 20% to the upside. I really honestly think that was a pretty simple long trade. But at the same time, as you're coming down and you're putting down lows here on Tuesday the 11th, we are coming down and putting lows down here. Look at this, Tuesday 11th, right? So as you hit the CME gap fill Tuesday 11 at midnight, you see Trumpcoin putting in its low Tuesday 11th at midnight. So Bitcoin and Trumpcoin actually moving very, very, very correlated. The all-time high of Bitcoin put in very similar time when Trumpcoin actually got its retested the harmonic. Remember, point C of the harmonic. Down from there. And then Bitcoin rallying as it fills the CME gap, as Trumpcoin hitting $10 liquidity. I think that was really, really significant. So you could have longed either. Okay, they both had valid setups. You could have longed the retest of Trumpcoin or been very aggressive. You made 20% gains to the upside there. So, you took a pretty amazing trade on Trumpcoin. Bitcoin with not quite so high percentage gains, but nevertheless still a respectable 10% pump to the upside. Trumpcoin over 20%. But what I wanted to bring to your attention there was the importance of Trump coin and why. I hope I don't lose you here, but I did take a long on Bitcoin because I recognize the importance, first of all, of Trump coin. Second of all, I've never said that the CME gap fill does not equal a long. I've said many times that filling the CME gap is a bit more bearish. Yes, okay, for me. I would not, though, say that that's not a long opportunity. For me, that's always been a long opportunity. And I took the long off of that opportunity. But it's one of these where I think we can rally. Absolutely. I'm expecting the rally. I've done YouTube videos even about this. Fill the CME gap, rally to $90,000 zone, and then get the drop. So, of course, I'm looking to long that CME gap prior to it being filled because I recognize we're probably going to rally from that. And as we have, we've already done a 10% rally. This can go on for more, of course. But one thing that I really want to just get into your brain here is this perspective that sometimes people can think of. Oh, Daniel's saying new lows are coming. Daniel says the CME gap fill is bearish for Bitcoin. Daniel's super bearish. People can get really hung up on that and ignore the rest of the facts. I would speak for 10 minutes and they'll focus on what I said for 10 seconds and ignore the other 9 minutes 50 of powerful information, and that's not what you should be doing. You should listen to everything that I say. Everything is, if I'm talking about it, it is important. I believe it can help you. I do not waste my time. And so with this time, I hope you can understand the understanding of, understand that I can be looking for new lows, think that this is a bull trap rally, but still get involved on the long. I've still given a very good respected opportunity for the long trade off the CME gap fill. At the same time, Trump coin is hitting $10. As I am as a trader, if you're a champion member, $10 Trump coin, very important psychological level. Super important psychological level. And the way that came together, it gave a very valid reaction. Why do I mention this now again once here? Because you see the position I put myself in. I believe that Bitcoin here, bull trap rally, that will come down to make new lows. If I am wrong and we rally to all-time highs, I still got the long from the low. You see how powerful that can be? I expect, I've already got my stop loss into profits. I expect this to be stopped out this long. If I'm honest with you, I expect it to be stopped out because I'm expecting new lows. But you can see how powerful it is in trading that you can... I can be wrong per se on this trade, right? I'm expecting new lows to come. I still took the long because of the reaction that we had at a very significant level. Very nice reaction. Pretty easy trade. I really feel it was a pretty easy trade. Nothing out of the ordinary there. That was very kind of standard. CME gap fill, fake out of a mini range low. Anyway, I digress. Took the long. If I am wrong in, and we rally to new all-time highs, well, I've still got a very good long trade entry and I'm making profits on that trade, right? If I am correct, well, we got the rally, I'll get stopped in profits and we'll come down to new lows as expected. But you can see I'm very open with the market. A lot of people sometimes will think, oh, Daniel's super bullish or Daniel's super bearish. But I would say, please write this down. Daniel is never super bullish or super bearish. Daniel is like water that will flow with the market. He can put himself in positions where he is wrong with expecting lower, but still make profit because he took the high probability trade setup at the lows. You know me. I will never be taking shorts down at the lows. I'm only looking for longs on drops. Just as on rises, I'm only looking for shorts. You're never going to catch me shorting the bottom or longing the top. I will only look for longs down here. I was given the valid long trade. I took the trade entry. I can be wrong per se on my analysis of that will make new lows, but I can still make the profits. That's what it's about, my friends. It's not about the ego of always being right, never taking the losses. No, you want to put yourself in on the chart, zoom in on probabilistic mindset, viewing high probability trade setups, and that's what you want to focus on. So yeah, with that, I'm running out of time here, but what I want to say is, yeah, I do believe that Bitcoin will make new lows. And now why? Well, I think that this was too easy of a setup, believe it or not, right? I think that this CME gap fill was just so easy long. For me, I do not think that this is the low because I think everybody longed this. People have been looking at the CME gap fill now for a few months, right? It's nothing new. It's not like hard analysis. It's super easy. I would just be so surprised if And this is the thing, I believe we can rally from this. I believe the rally can continue. It's already got a 10% rally. But what happens with the majority of these people, right? They're in 10% profits. They could go to 20% profits. They'll round trip it all. You know, the majority average trader that longs here, they're in really good profits now. They're not going to take profits. They're not going to put a stop loss. You know, it round trips. They get stopped out. They end up in a loss. So, you know, I think the majority of people, yeah, they're in profits right now from the gap fill. They won't end in profits. They'll round trip it all. Their winning trade will turn to a losing trade. They won't take any profits on the rise. They won't move stop loss into profits. They will end with their losses. So this is what I'm basing a lot of my analysis here off of, is that psychology that I don't think that this is going to be the easy trade everyone thinks it's going to be. I think a lot of people have gained, not 100% of the world, but people that understand the you know, at least have basic knowledge of CME gaps, right? That was a very easy long fill. You actually got filled on the exact low. At that same time, Trump's hitting $10. I just think that was so... And I hope you don't take this as condescending. You know, I speak from a place of experience, you know, someone that was ready and waiting for this level for months. You know, it was an easy long trade. I don't want to mean that condescending, right? I just want to say it was an easy long trade if you had some good knowledge of the markets. And so my thought process here comes from, what's the likelihood here that Bitcoin put in the low 11th of March on such an easy long trade that so many people got filled on? I think the bigger opportunity here lies with a rally to the upside. People get super bullish. They really believe the low's in, and then another flush comes. So that's what I would like. I'm always, you know, you could say thinking like a market maker, but also just thinking about the understanding that most people get wrecked in this market. To be honest with you, most people lose. And if most people lose, why would they be given a free ticket to win here? And of course it can happen. And that's why I put myself in the position where I could be on that free ticket, free train ride to the upside. If it wants to go new all-time highs, hey, perfect. I'm not going to complain about it. I would say that I was wrong. Yeah, of course. I was wrong in thinking that new lows come. I can profit on that being wrong, right? And that's what we're here for. We're here for the profits, not for the being right. Okay, I think it's more important to make the profits there. So that is honestly, though, one of the primary factors of why I believe new lows will come. And I will give you a second reason, and there's not been a sign of strength yet. I will say new lows are coming here with a high probability. I would not be saying the same thing if we're trading at $106,000. At that point, massive strength, new all-time highs. You know, we have to update our bias if there's strength. Why can I still be saying with high probability a new low is going to be coming? Show me where the strength is, my friends. Show me where the strength is in this, which is currently still making lower highs, lower highs, lower highs, lower highs, lower highs, and still making lower lows, lower lows, lower lows, lower lows. Show me where the strength is here, and I will then say, I don't believe new lows are coming. There's nothing here, right, that's showing us strength. Look at this. Big resistance around $91,000. Big resistance around $96,000. Okay? Why would I be thinking, you know, in terms of probabilities, the low is in? Yes, wonderful reaction, valid long trade setup. But there's no strength here. It's a nice rally, yes, but it's still an overall lower high. It's still not reclaimed value area lows. We're still below anchored VWAPs. And that's where I would say, well, show me the reclaims, I'll believe the low is in. Until then, it's a very dangerous game to be longing now after a 10% rally to the upside. And look, you're only into this more local CME gap high. So I think it's a dangerous game to be longing now. Okay, again, I repeat here, we've already rallied 10% to the upside. This is not the optimal place to be longing. You're actually longing into some local resistance here, which is the gap itself. The optimal entry is really the only one that you had down here, right? After that, you enter into, you know, just entering into a very bad long trade. I think you had to snipe the low there, otherwise I don't think you had a good entry. So it's you know, that's really my thought process of. I summarize here. Bitcoin put in its all-time high in as Trump coin started to crash. And this is the argument of why the low can be in, by the way. So this is the argument of why the low is in. Trump coin, if it rallies up from here and that $10 liquidity was the low, well, then we have a strong probability of Bitcoin rallying as well, but we need to see that strength. So we need to see the reclaims. If it gets to reclaims, wow, that Trump coin was a major signal, as well as the CME gap. And this is where I would hold my hands up and say, well, I read that wrong. I actually made a pretty bad call of saying new lows would come. Even when there was that information in front of me, the CME gap feels super bullish, Trump coin taking out, $10, good reaction, super bullish. I will be able to reflect on this and recognize my mistakes. I will put myself up and I'll hold my hands up, and I'm not perfect. I can get this wrong, and that's why, no financial advice. I don't want people to be, taking this as financial advice. I'm just giving you my opinions here in a very honest way. I can be wrong, and maybe new lows don't come. What I would say is, for me, we can rally up here, $96,000, and my opinion is still new lows will become. This for me is a wonderful short opportunity. So yeah, I would say I'm wrong when we get the reclaims of resistance. While we're still with the lower highs, while we're still in the position of this major, liquidity, in my opinion, because of so many people have took the long, lots of liquidity below there. I still believe that this is a nice short to rally bull trap opportunity for new lows to come. We get the reclaims. Yeah, I was wrong on this one. I messed up on my thought process, and I will recognize that, and I will read into that, and I'll give you some feedback of how I could have improved. But for now, I do believe that the new lows are coming. I've given you my thought process. I was gonna go through a few other things that maybe I'll have to put this in a new video, because I have 10 minutes. This is something that I think is pretty interesting. But you'll have to let me know in the comments whether you like these types of sections. But I read this today and I thought this could be a really interesting topic to talk about. Look at this. Day traders consider themselves successful if they bought a stock at $10, sold at $11, bought it back the next week at $24, sold at $25, bought it back a week later at $39 and sold at $40. If you can't see the flaw in this, the trader that made $3 in a stock that appreciated by $30, you probably shouldn't read the rest of this book. I actually say I do not agree with this at all. I think the thought process is very flawed, actually. So yeah, the holder, they hold the asset from $10 to $40. Brilliant. They made a lot of gains. Happy for them. The trader who made 3 winning trades has also made great gains, right? Again, this all comes down to position sizing as well. Position sizing very important. But if you're going from $10 to $10 to $11 stock, that's a very, very profitable gain that you probably made there. So I would say this. Yeah, the holder, $10 to $40, amazing. The trader also has made some great gains there. It depends on the trader. but I think there's some good gains. But think about this then. Oh yeah, this is great in a scenario where it went from $10 to $40. The holder made some wonderful profits. But what about if it went from $10 to $5? Well, a trader can make money shorting the market. Just as they longed from $10 to $11. They could have took the short from $25 down to $5. Well, guess what? The hodler took it from $10 to $25, ended in a loss. Happens more often than not, especially in crypto. Yeah, if you're talking about the stock market, then yeah, maybe not so often. Crypto, my friends, so many people lose everything in crypto. That's why you got to be trading it, in my opinion. And I know people are going to come out, Bitcoin, hold it forever. Okay. I think a lot of people are gamblers. They're in the meme coins. They're round tripping everything, I'm telling you. Altcoins are the recipe for losing money if you hodl. Not financial advice. And I would say this, you could take the trade from $10 to $25, take the short, trade it down to $5. The trader is protected on drops in the market. Also to bear in mind, right, you have to think that the trader had free capital. They took the trade from $10 to $25. Let's say, okay, and then it drops from $25 back to $15. Okay, they could of course short at that time, or they could long another market which is more bullish. Whereas that hodler, they have to hold through all the highs, all the lows, all the highs, all the lows, potentially. This could take a very, very, very long time. That trader is in and out, in and out. They can move the capital between assets which are performing the best, which are making the most money. Okay. I just thought this would be a little bit of an interesting take. You could say, I think the only thing that you could argue against why the trading is better here is, well, first of all, if you're not good at trading, okay, that's a given. The second is time opportunity. So, of course, like as a trader, you have to, sacrifice, let's say, more time to make the profits. Whereas the hodler here, yeah, they're not doing that. I would say that comes down to my thought on this would be, well, trading is a job. That investor, I'm sure, also has a job. So, that the investor is made $10 to $40. The trader, is their job to be doing this. Again, everybody, even if you're a billionaire, right, you're still putting in time, you're still working. Name me a billionaire that sits on their island all day doing nothing, right? Everyone's still working, everyone's still putting in time, everyone's got a goal, and it never ends. So my opinion of, okay, yeah, the trader is using so much time, well, that's his job, right? That's what he enjoys doing. I don't think you'd find a trader that's making these profits that's not having fun. So I think if you anyway, this is like a subsection of the video that I thought I don't want to spend too long, so I literally only have 5 more minutes. I was going to expand upon a few other things as well. Just let me know in the comments if things like this would be interesting to you. I say here, again, have to say no financial, no tax advice, but I do not think anyone should be trading in their own personal name. I think company trading, putting your profits, trading, easier to get into real estate. Really think everything going through companies is just so much better, easier, safer. And then I had the comment of, would it also be for funded traders? I hold the same opinion for investors, spots, holdings. I think always is nicer via companies than the personal name. Of course, you got the initial setup. You're going to have to get some tax advice, accounting, company creation, etc., etc. But the long term, I really feel that the company creations is better. I also go on to say about tax efficient structures. Of course, we're not talking about avoiding taxes with companies, but being tax efficient. Of course, that generally comes with moving as well, and that's where I had this final tweet of why I left the UK and then I left Europe. To find a better place to structure yourself, to structure your company. I mentioned here to shout out Southeast Asia, South America, Middle East, great options, tax efficient, wonderful lifestyles. You've got the weather, you've got the services, you got the safety in the Middle East. Each of them have their pros and cons. There's no perfect place, but I think when you compare any of these places up against something like the UK or okay, and I generalize when I say Europe, right? But a lot of Europe, these places, massive downward spirals, taxing you like God knows what. And you just have a poor quality of life, right? You wake up in drowny old UK weather, right? Everyone complaining, everybody's sad. Or you come across to the South Americas, everybody's happy, everybody is just living their life. And I mean it, like the culture you surround yourself, such a massive thing. I don't think you want to move solely for tax efficiency. But of course, if you have that in your brain, that's of course a major, that is going to be a big point. But I don't think it should be your sole point. You should want to move because you want to leave, that downward spiraling countries. But anyway, I digress because, obviously this is a massive, massive, massive topic. I could spend hours talking about it. And so, yeah, if you're interested in, me expanding a bit more of why companies are better to trade through than personal names, again, no official advice here. You have to refer to your own tax accountant there. But why I think whether it's for hodling, funded, anything, right? I always believe it's best to do via a business, right? Via a company creation. And if you would like some ideas, I would say then, let's say of where you should move to, and maybe even why I left the UK, left Europe. I'm happy to do that, but it will be in another video because for now I do have to run. If you've enjoyed, let me know. Happy to do that. And of course, the main focus is always going to be on the charts and the trading. We'll see if I'm right. Again, disclaimer, Bitcoin can rally here and I will still be right. I'll be aiming for my new lows, looking to short the rally. Hope it's made sense. Hope you've enjoyed. And this was a quick Sunday video. I have to run again now. And I just wanted to give you some time here, share with you all, share the love. And hope it's helped, really do. It's been a very, very different video than normal. So please, please, please leave me a comment down below. Give me some feedback. And yeah, like the video, share if it's helpful. Cheers, everybody. Thank you. That's me signing out. Goodbye.